How we doing today? Today was a Tuesday. It's been a minute. It's been a minute. Yesterday we had a bank holiday, so I wasn't gonna trade that, and I wasn't really gonna go over yesterday's action just because I don't feel like it's needed to. But yesterday we had a bank holiday. Today is a Tuesday. Mark's gonna go open up, and I personally was just trying to stay kind of away from from just the morning action, the AM session. I thought it was a little bit trickier today, but we're gonna go down like everything that happened today, and we're kind of just gonna go over it. So basically, if we start from the daily and we start from the order flow that we currently have, like we're clearly bullish. We're establishing new highs, and right now on NQ, we're in all-time highs. So I am going to be bullish until disproven otherwise. It's going to take a big move to the downside for me to be bearish. If we look at the structure that was given to us before we open, we have London puts in this high here with this balanced price range. This balanced price range is going to create a lot of resistance. So it's going to take a meaningful move to break above this balanced price range. So my eyes were kind of really on this today. And as you can see, just the respect that we show this balanced price range. The bodies or the wicks, yeah, well, the wicks and the bodies are showing ultimate respect to this balanced price range. And as well, we kind of have this three drives pattern, which will also showed up throughout the day, which I I kind of just count this as high resistance liquidity. Like I know it's whenever I see this three drives patterns, I know it's likely to go lower or it's likely to go the other direction than just continue going higher. And if it does continue going higher, then it's likely going to be choppy and you don't really want to be in it. So that's what ended up happening. We ended up getting displacement because BPR. And yeah, look, I have some annotations on. I honestly don't remember. Okay. So yeah, I have this BPR marked out here, and it's gonna get a well. These are it. This may seem like it's all like none of this is helpful at all to have on the charts, but I think it is. This is that new week opening gap that we just had, and then this level right here is this new day opening gap that we really had here. And anytime that we're in consolidation, these levels are gonna get referred back to, and like these levels held up very nicely today, as you can see. Like this random level ends up holding up nicely. Like you have constant encroachment of this new day opening gap. You might be like, oh, well, I thought we are gonna go to sell side, but no, price just wanted to reprice back to constant encroachment of that new day opening gap. That's exactly what ends up happening. But first, let's see what we're doing around New York Open. So around New York Open, we're accumulating around that BPR. We have sell side resting below us here. We know that this is just too clean. This looks too clean. We now have high resistance liquidity above us. I know it's more likely to go lower than it is to go higher, just in my personal conviction. That's what I was kind of looking at. I was kind of at a bearish stance. And then we also are coming off of this 1 hour PD array, but keep in mind that the higher time frame is bullish. I still want to have a bullish bias, but it's not wrong to look for shorts. So that's kind of what ended up happening. We ended up having accumulation, manipulation, distribution. AMD right here ends up playing out accumulation, manipulation, distribution into constant encroachment of this level. This may seem like a cherry picked level, but it's that new day opening gap and look exactly constant encroachment. That's what you want to see. And then as well as that, I'm going to mark out standard deviation. If we mark off this fulcrum point from this high to this low, ends up lining up nicely, and we end up respecting negative 1.5. I do want to draw in the bodies because I haven't done that. You can also draw standard deviation from the bodies. I haven't done that, and look, we're negative 2.5. That's your possible reversal area. And if we actually, I'm not gonna use this in reference to this because this comes from a different move. That comes from a whole different move. So okay, there we go. And then we end up hitting constant encroachment at a certain time. At a certain time in the market, I'm gonna stay on the 5 minute for a minute. At a certain time, we end up forming an SMT. SMT at constant encroachment of that new day opening gap at a certain time. That 950 macro. I would have liked to see. I would have honestly liked to have seen sell side here, but it all makes sense now. It all makes sense now. It's putting back together. We don't have to take this sell side right now, but we don't really have a higher time for SMT. We just have this lower time for SMT. We're bouncing off of constant encroachment of that gap. Then we end up getting this change in state delivery on that 5 minute with displacement higher. We had 10 a.m. news today. That 10 a.m. news put in that SMT. There's narrative behind this SMT now. It's now formulated with that news. And I'll pull up ES just so we can see the SMT here. Or maybe not. I just messed up my chart. So we end up having SMT. I know I should have probably. So look right here, ES puts in this lower low here. NQ fails to do so. NQ puts in that failure swing. Then we end up getting displacement higher. Fair value gap, SysD right there. That could have been an entry right there. Because now you have time aligned with you. Silver bullet hour. We now have liquidity resting above here. I was looking at this level as well. We have constant encroachment of this wick. Look at the bodies. Look at the bodies of these candles. They're respecting constant encroachment. Even though the wicks are outside of them, the bodies are. And then we end up having second stage of distribution where off this order block, also this fair value gap. Also, let me mark out constant encroachment of this wick, which I believe it looks like we do tap. Yeah, we respect it. It colors a little bit outside the line to reprice that order block. And then we get displacement higher right back up. This high gets taken. So overall, this was a market maker buy model. It was a little bit trickier. As we also can see here, we have this inverse fair value gap where we reaccumulate at. We reaccumulate at this fair value gap in that change of state delivery. It all makes sense. It all makes sense. And then I want to drop down to the 1 minute time frame because it could be a 1 minute demon here. We have SMT, displacement higher, change of state delivery on the 5 minute, where we end up tapping change of state delivery. We end up repricing this fair value gap, and this fair value gap gets left as a breakaway gap. This fair value gap ends up getting left as a breakaway gap. I want to mark out standard deviation. You now have narrative associated with that. You have SMT there. You can do the last manipulation leg and look at where your levels map out to. -2 to 0.5 lines up perfectly with buy side. This is exactly what you want to see, and you can see the respect to that level throughout the rest of the day. And then what I want to point out as well is this standard deviation or this silver bullet accumulation zone. Where does silver bullet end up happening? Right in here. So the first at 10 o'clock we get displacement higher. That starts at 10:10 macro. We end up coming back down to where SysD. We end up taking this low. This now is the intermediate term low right here because we have a short term low here, and then we're waiting for this to get confirmed. What adds confirmation here? We have that SMT all occurring within this fair value gap, 5 minute fair value gap. You have to have context around the trade at a certain time of the day. It's happening during the silver bullet hour. And then we get SMT, and then we immediately displace higher. We have buy side resting above here. And then we come back down. We have a few down close candles here. Come back down into this order block range. This also is a mitigation block. This is not a breaker. It's a mitigation block. We end up coming back down very nicely too. And it looks like constant encroachment of that was what we tapped right there of this series of close candles. Yeah, that's constant encroachment. Constant encroachment, come back down. We reaccumulate. Boom. Buy side taken. So that was... Yeah, I just got called. And then we end up taking buy side here. And the same thing happens. I was talking about this earlier. 3 drives, 1, 2, 3. It kind of is like 4, but all I'm saying is that we have high resistance liquidity. And then we end up taking buy side here and then buy side here once more. I believe we barely purged this high, so I think you can say, yeah. So we end up purging that high. Classic 2022 model at a certain time of the day. At a certain time of the day. This doesn't just happen at a random time. It happens at 2? It's programmed to happen at 2. We end up getting displacement lower. Pull back where? Breaker. Mean threshold. Well, I believe 75% is what the exact precision. We'll map it out. See how precise this was. Look at 75% to the tick. Boom. Sell off. You now have this is generated sell side. We have our sell side underline here. That BPR still got respected. It makes sense that price is this. High resistance liquidity into that BPR. Breakdown, displacement, market structure shift for a value gap breaker. That is a nice setup that we end up having today. We'll zoom to the 1 minute. I think it's definitely a lot clearer on the 5 minute, but to get a little bit more precise, here's your buy side liquidity sweep here. at a certain time. Like I'm not really interested in a whole lot of this because I know this is lunch hour, and although yeah, you could have a move within here. I know that you're likely gonna get chopped throughout all of this instead of just waiting for the right time, wait for that 2 p.m. silver bull hour. We end up coming back up. Where do we reprice right to? Fair value gap here. That's refining that breaker because this is a 5 minute breaker. You can refine that a little bit. Where to that 1 minute fair value gap. All this is now balanced. You have this inefficiency here in price. Boom. And we end up having another fair value gap entry here. If you missed that, if you weren't confident, then we come back down. Boom. Then another spool lower. And then this right here, come back in, institutional order flow entry drill. But what is this on the 5 minute? What do you think that is on the 5 minute? It's an immediate rebalance. Look at the wick right there. Immediately rebalances that wick. Does it allow a fair value gap to form? That's very, very bearish. And look at where we just end up selling off. We end up ripping through that right here. And where this might seem cherry picked as well. But that new day opening gap, notice we are holding. Look at the bodies. We're still respecting that 75%. Look at the bodies. And then as well as that, if we pull over this 1 hour fair value gap, we hit constant encroachment of this perfectly within that 75% quartile after taking sell side. After order flow is bullish, this now just becomes a liquidity sweep. That's what we end up having today. We end up establishing a continuation purge. What are we waiting for? Waiting for a little bit of displacement higher. You get that change of state delivery here. We never get referred back to that change of state delivery. But why do you think we never come back to change of state delivery? The time of the day, it's 3:15 to 3:45. We have unfinished business up here. Market is in a hurry to reprice these levels here. We end up, I'll zoom into the 1 minute here. Displacement higher. I guess you could have I wouldn't really look to enter down here because I don't know. I like to see more confirmation. Then we end up forming this fair value gap in line with this order block. And then we have the SMT. Where is this occurring at? New day opening gap. Or new week opening gap. This is the current new week opening gap, I believe. Or no, it was last week's. It was last week's new week opening gap. Where's this new week's opening gap? I swear I had it on my chart. Oh no, that is this week's new week opening gap. Okay, that is this week's opening gap. We end up having all of that at a certain area and price, and we end up spooling higher. Where to? This liquidity that we have generated here on this way lower. There's not really anything else I see. I guess you could maybe use these inverse for value gaps on the other side. Notice this one where we reaccumulate at. This one, you drop down in right there. This down becomes immediate rebalance. Breakaway gap here. Prices are going to head back here, and then we're just in a hurry to rush the buy side. I'll pull up ES because I like NQ a lot better, and that's what I'll mainly trade. I do think that the model this morning was clear on NQ, but it's pretty much the same thing. We have that we have the BPR here, accumulation, manipulation, distribution, but actually looking back, what time was this? Was this at 9:30? Ooh, we had SMT at this high. That's a little bit more I didn't know this. We had SMT at this high, I believe. I can pull that up to confirm. But yeah, we end up having SMT at that high. AMD, this now makes that model, yeah. Because we actually took that high. So this could have been some narrative. We have the SMT there. And then displacement lower. Overall on ES, I mean, it doesn't look the best. You kind of have this inverse we don't end up tapping into. Overall, I wouldn't really look to trade this model on ES. But what do we break down here at a certain time? Silver bullet right here. We definitely have SMT at the highs here. I'm not really going to deep dive into too much of SMTs because I found, for me, the more I've looked more to try to find SMT in my charts, I don't go in my charts to really look for SMTs that much anymore. I look for them at certain times. 2 p.m. when we're tracing back up into here. Yeah, we do have SMT at these highs. Divergence there. Then we come back lower. And what do we have? We have low resistance liquidity. We are just generating low resistance liquidity. We have low resistance, low resistance, low resistance, low resistance, low resistance into a PD array. I believe on ES 1 hour PD array, we're still holding. Sharp turn, we end up having manipulation fair value gaps in, and we have a fair value gap out. Credit Arjo, and then we come back, change the state delivery, or I would more refer to this candle. You also could maybe refer to that. You have the inverse, we reaccumulate at, same thing. But yeah, that was today's price action. I'll pull up YM. I didn't really do any analysis on YM. I didn't really look at it because I don't really look. I mainly use YM for just gauge where we're at in price. And as you can see, yeah, I don't really want to. But yeah, overall, let's map out like the bias going into the next days and kind of just where we're at, what we're looking for. Look at YM on the weekly. We just opened up the fresh week. We had Monday, Tuesday trading. We have now closed it, or we now have traded through this imbalance here. We're now within this volume imbalance here, and I want to see, is there any sort of respect to this? This is a volume imbalance mapped out with the inverse fair value gap. This inverse fair value gap has a little bit of narrative because we have swept liquidity with it. We've had the displacement higher. I want to see if this area is going to hold on YM. So this is an area which I kind of could be a little bit bullish on YM, but obviously I'm not going to put too much emphasis on YM. Notice as well we do have this mitigation here. I'm just going to map it out with this. That we actually, to the tick. Yeah, we pretty much deliver like to the tick. To that daily mitigation. That was the draw on liquidity. I didn't notice that today. We ended up delivering to that. Honestly, this looks kind of nice. We end up having a wick on that daily candle as well. I want upside. I at least want to see this fair value gap get traded into. Obviously, I'm not going to put too much weight on YM. YM's just kind of just gauging on what I want price to do, but yeah, that's something to look out for. Let's look at ES on the daily. On the daily, we've rebalanced this fair value gap. I'm still bullish on ES. This does look like this could be a liquidity sweep here at the highs here. We have taken these highs. We've gone from external range liquidity back to internal range liquidity, and now I'm looking for a trade setup back up into external range. If we look at this though, this isn't really generated liquidity. Ideally, if I want to see a retracement into internal range liquidity, I want to see inducement into that range. It's not really so much what we have here, but if we're looking at this, we have a sweep here. This could be a continuation purge. I want to see an overnight session. Are we holding this fair value gap? Are we going to still respect this fair value gap? And I want to see how we open up tomorrow. Overall, this is looking like we're still bullish, and I feel like we could get a run up to maybe this high tomorrow. I feel like that's what could happen. You can now have your smart money reversal. You have your low risk entry first stage, possible second stage. I mean, technically, I don't really like first stage, second stage, saying all that because I just think of it as like ways to get into the model. That's just me personally. Let's break up NQ. We have this 1 hour fair value gap, bearish fair value gap. We mitigated, come back down to this fair value gap, constant encroachment got hold. This now becomes a liquidity sweep. We have swept all these lows. This looks pretty bullish on NQ. Displacement. This is just liquidity generated. To then have what type of news do we have throughout the rest of the week? Tomorrow we don't have any red folder news. Okay. So possibility for slower action, and then we have GDP, pending home sales. I don't really care too much about what it is. I just want to see. Then we have PC. Okay. So we do have some folder news coming in, and overall, I think this week week's just going to be more bullish continuation. Is this low of week? I would like that. I would like that narrative. The fact that we're establishing a fair value gap here, we put in possibly a low of the week. At where? Higher time PD rate. Wait, where's Monday? Monday we accumulated. Tuesday we manipulated. And I could possibly see us having continuation the upside. It all depends. Kind of see what happens day to day and don't get too caught up with everything. Okay, let's pull up DXY. DXY, I'm going to pull it up over here because there's more notations. DXY is a little bit tricky for me, honestly. And I don't really. It's not like clear set in stone on what it wants to do. I know there's a lot on this chart. But basically, just off the structure that we just had, we just had a market maker sell model into this fair value gap here, and now we're showing like we could be bullish here. I don't want to see that if I'm bearish on indices. We do have this redistributed rebalance PD array. Redelivered rebalance, whatever you want to call it. So I'm really watching this fair value gap now, or this kind of range here. I don't really like this. I want to see more continuation lower. We have this low right here. I want to see something like this. So I want to see more continuation on the downside. We're just going to see what dollar does. I'm not going to overanalyze dollar because with my analysis, I just like seeing what dollar does. We haven't created any fair value gap on the downside, and we're just bouncing within here. We're kind of just consolidating. So I'm not going to put too much emphasis on the dollar just because I can't really read it very well. And I don't really know what it wants to do. I don't think that we have put in a bottom here. I honestly think that we're going to rebalance this weekly imbalance that we have lower. Something like that. And then back to the upside. And then this will be your market maker buy model, and then that will be within a market maker buy model. I think that's what's going to happen. Me personally. Overall, I also want to do... Screw it. Let's check gold, bro. Let's check gold. Let's check Euro USD and GU. Let's check EU and GU. Actually, I don't really want to check gold. But gold, come back. IRL to ERL. I would remain bullish on gold. Fair value gap, we were priced to. Hourly. We had a sell model where to that hourly imbalance. These lows right here. This original consolidation. And now becomes a nice market maker sell model. Actually, I don't really like looking at gold because it is manipulated. But basically, fair value gap there. Boom, right there. Boom, fair value gap. Breakaway gap. Pull back, fair value gap. Pull back, fair value gap. Very nice entries on this sell model, actually. Like, very occasionally, gold will, like, look nice, you know? What was this, like, trade thesis off of? Was this all-time highs? Yeah, ERL to IRL. That's exactly what ended up happening. It's actually what could have been a nice trade setup here. I don't love trading ERL to IRL, but it's the trades there. ERL to IRL right there. Zoom in the 1 hour, you get that. What are you waiting for? Changes to delivery. Market structure, fair value gap, 2022. And ends up selling off. Okay, let's look at EU. EU, I'm bullish on. We've now come back to this fair value gap here. I want to see this high possibly be the draw. We rebalance where kind of this order block very nicely. Displacement higher on the weekly. Zoom into the daily. We have a fair value gap here. Order flow still bullish. We have taken this high, but I think that we're still bullish. This now becomes low resistance. Low resistance liquidity. You have manipulation for value gap into bullish for value gap. Sharp turn right here. Bullish for value gap. I'm expecting to see. This might. Do we have SMT with GU? Okay. We do have SMT the high with GU, so I don't know. I'd be careful. I don't trade Forex, so I don't really know too much about Forex, but I still think that we are within this market maker buy model I have marked out with GU. So I think that ultimately. But let's get into Bitcoin because I have been kind of paying attention to Bitcoin, and I think, like I've been saying, I think we're ready to go. We're ready to go. This is clear to me. This is clear to me that Bitcoin's ready to go. Come back down, daily fair value gap, daily order block, daily mitigation, daily inversion right here as well. Notice the bodies. We have buy side clearly resting above here. I mean, I don't really trade Bitcoin, but like if I were to trade Bitcoin, like this would be nice. You now have your intermediate term low. This could be your inverse entry right now. We'll keep up with that. We'll see what happens. I really want this to be your intermediate term low, and then I'm like, this is just generated liquidity within already generated liquidity. So this looks clear to me, honestly. Look at that wick here. That looks nice. That looks nice. That looks nice to see that wick. So we'll see what happens on gold. Yeah, that's just my overall analysis. And look at where standard deviation kind of maps up. I bet negative 4.5 will probably get you to that. Do you use automatic high or low liquidity? I do not. I do not. I don't use the indicators I use are sessions indicators. If you're still watching, but I use ICT, kill zones, and pivots. Which honestly, I don't really think that you really need it. Like I think they're honestly like, if you like doing your thing, like mapping out where the low, because you just say like, where does Asia start? I guess 8 to 12. Map your high to low in that, and then we end up having London high a day. Hey, appreciate it. Yeah, I just wasn't live today. That's just kind of how I've been recently. I'm not gonna be live because like I used to go live every single day, but I think that just was kind of stunting my growth. Or I feel like I could have been growing a lot more, but there's nothing wrong with that. I love going on live, and I also do miss it, and I want to get back to it. I'll probably be live tomorrow, and I think I might need to probably have a more consistent upload schedule. But yeah, just like I'm focusing more on my development as a trader than posting on social media. And there was a minute where I was focused on posting on social media more than my development as a trader. I was still doing both, but like I really want to develop as a trader. I really want to grow as a trader. That's what I want. I don't want to come on social media, and I don't want to try to try to look like this tough guy, try to look like my life's all together, like try to look like that's not who I am. And for a moment, that was what I was kind of doing. For sure, do what develops you as a trader always. I would agree. And like the best thing you can do to develop as a trader is just to listen to your own advice. That's honestly, and like find a mentor and just stick to that and trust your heart. Trust your heart, because so many people are gonna tell you different things to do. Oh, do this, and especially with social media. I think it's best to just stay off that and just kind of just focus on yourself. But there's always good and bad to everything, and there's a lot of good to social media. Like I've been able to meet a lot of people, and there's so much information you get on social media. But you got it's a double-edged sword. But yeah, that's basically today's analysis. In my opinion, I don't think there was really anything else that was there. We had 1, 2, 3 drive, broke down. Asia or London put in the high a day. So I think 70% of the time we'll put London high a day. We have a BPR here. We have AMD, SMT right there. This could have been a possible short. Let's. Where it could be a possible short? Was there a possible short offered here? Maybe on the lower time frames, a possible short here into maybe sell side here, and then you could have had TP at new week opening gap. You could have had some targets down here. And obviously, if you were to hold to all the way down here, you would have got stopped out. But yeah, I think maybe on the second chart there could have been an entry there when we had our AM. Wait, we have this for right gap here. Come back up. I'm guessing there could be a fair value gap here on the lower time frame, and that's what you end up coming back to. And then we have SMT here, a buy program. You have your 10 a.m. silver bullet. This is really what you're looking for. This is your bread and butter. 10 to 11 hour. SMT at lows, swaps higher, change to delivery. Negative 2.5, negative 1.5 is your reaccumulation. Order block for value gap. This is a breaker block here, and this also is an order block range here. And I'm coming back to reaccumulating, consolidating before we end up having that one last move to the buy side. We have 3 drives. Don't really want to trade this. This is during lunch. You can trade this, but I don't really want to, and that's not how I want to trade. And then come back up at a certain time. We end up starting delivery. 150 macro. I don't know why I said that. I don't really ever use 150 macro, but I more pay attention to the 2 o'clock hour. Buy side. Also buy side taken here. Buy side taken. Market structure shift, fair value gap, 2022. Breaker on the 5-minute. Boom. Right here. Sell side. Nice sell model. Then 315. We end up coming back into constant encroachment of that fair value gap. 75% of this new day opening gap. Displacement higher. And then we end up having a buy program. What is futures? Futures is just a contract. I don't know. It's a way to trade. Like you have options. You have. I pretty sure know about options and futures. I don't know anything about forex, but yeah, it's a way to trade. It's a contract. So you have your options contracts and then you have futures contracts. That's from my understanding. And futures is a lot better because you don't have theta, and that's why I trade futures, to not have theta. But yeah, that was today's analysis. I'm gonna head out of here. Yeah, I think that today was a nice little Tuesday come back from. You could have had some opportunity today. Both silver bullets were there, so we'll see what happens. Was looking for your live for today's analysis. Missed trading today. Was it nice? I didn't trade. I just tape read, and I did think that it was kind of. I was a little bit confused during here. I wanted to see sell side get taken, but looking back, it kind of makes sense. What do you mean futures doesn't have data? Theta. Sorry, theta. Theta. If you look up what theta is, TH, it's a Greek. It's pretty much, it's a, look it up. It's every time you hold yourself, the more you hold that contract, the less value it has. Where do you see yourself 2 to 5 years from now in your trading career? Ooh, I don't know. I don't really have like specific targets of where I want to, and I think that's at least how I view it. I don't think it's best, especially in trading, to like say you want to be, I want to be making 10K a month, and no, I don't think that's. All I see is me being very, like, having a lot more understanding. Just show up every day and just continue to put in the work and the effort. Have you started trading? I'm still studying PA. I'm gonna make like a little video on it on Instagram, and I'm gonna say I'm probably gonna take maybe 2 or 3 more months in just studying PA and not taking a single trade. Not taking a trade. I didn't go to college. I dropped out of college. Well, I didn't go to college. I'm not going to college. I'm doing this. Yeah, I'm just studying PA, taking my time with it. What concept do you think I should 100% know watching 22 ICT, but what else is important to know? I would say it's time. Study time. And that's what I'm studying a lot more as well, is time. Like, in here, time is most important, and then it's price. Time, then price. Like, this move isn't going to happen at, like 7 a.m. It's going to happen at this 10 a.m. macro. It just makes sense. There's certain times that we do certain things, and I would say time is very important. I would know what, honestly, I wouldn't put too much analysis on SMT. I wouldn't dive too much into SMT. I mean, obviously, I'm still a student. I'm still learning too. So this is just, if I could go back, I used to always get caught up in SMTs and only looking at SMTs. SMTs are only important when time is considered. I would say, number one, study time. Like, what time of days are certain things happening? 10 to 11, and then 2 to 3. That's all you need. These 2 time windows. I would see, where did both of these setups happen today? This is a good point. Where did both of these setups happen today? Where do we end up having this nice run to buy side and this nice run to sell side? Is it a coincidence that these both happen between 10 and 11 and then 2 to 3? No. If we look at, like, pretty much any other day, not Monday. We're not going to look at Monday. When does price start displacing? 10 a.m. That just makes sense. Where do we ever having maybe possible displacement on the downside? It looks like we don't really end up having it, but 2 p.m. we end up displacing the downside. It just makes sense. I mean, you can trade all this, but it's just not going to be as consistent. And then it's just like showing up, Here, we end up displacing lower before 10 a.m. So what are we expecting 10 a.m. to do? Probably continuation. Then you have 2 p.m. I guess this isn't the greatest example because there's gonna be days when it's not picture perfect. But today was a picture perfect example. Yeah, I would recommend, like, time. Time is the most important factor. And, like, for a second there, I was dialed in the charts. I was looking at the charts for 5 hours a day. I was on stream for 4 or 5 hours a day, which there's nothing wrong with looking at what price is doing, but like realistically, if you stay away from the charts from really just this lunch hour from 12 to 1, unless if you know exact, like unless if it's super clear, like we just took buy side here, so it makes sense that we're generating liquidity or having this three drives pattern to then head lower. So like I don't think it's not very important to be in front of the charts during this. Like have a life outside of just trading. Definitely watch the stream. I appreciate it. And like I would say that the best person to watch is ICT. Is the best person to watch is ICT. And like you guys know that I'm just here to give my analysis, and like I don't think that you guys should take my analysis like it's because I'm a student. I know that there's gonna be some gray areas in my analysis, but for the most part, my analysis is still gonna be there. But I would definitely recommend watching. I've been watching the 2023 mentorship. I'm almost finished with it, and I will say that I really like that because it's helped me piece together a lot of things. And I would say just put in time and effort. And yeah, I would say like I've been saying in ranting, time and then price, and then other than that, liquidity. Yeah, okay. No, number one thing I would honestly say, don't rewatch my stream. Don't rewatch my stream. Just watch. I would recommend just. I like the 2023 ICT mentorship. He does rant a lot, but it's all beneficial for you. But yeah, I would say don't listen to my analysis. Listen to someone that knows more than me, and someone that's is well versed in me, because I'm still a student. I would recommend watching just ICT and just watching it, because a lot of people don't like watching it because you think that he rants. But if you just listen every single thing that he says, like I've watched the 2023 mentorship entirely, pretty much. I'm almost finished with it. There's not been like a single word or a single tangent that he hasn't gone on that hasn't been beneficial. And if you're getting that all for free, and if you're complaining that he's just ranting the whole time, I think that's just ignorance. Just ignorance. And just take notes and study, and do it yourself as well. Like say you just watch my, or say you just watch anyone in general, and you see their charts. You see their charts display certain things. And then you see that, oh, yeah, this makes sense. This makes sense. It doesn't do you any good unless you go into your own charts and you see it happen yourself. If you see it happen yourself. Like, anytime I watch an ICT video, I go into my charts and I pretty much write down what he's doing. And I go and I annotate my charts like he does. Or I annotate them charts in my certain perspective. No one's going to do the reps for you. So that's just some advice I have. And don't focus on the money at all. Just come to learn. Like, I'm not even trading. I'm not even trading right now. I'm just studying price action. I'm just looking at what price is doing. Are some people going to think that that's outrageous? Or some people think, oh, you don't learn if you don't have actual money? Yeah, I don't care what other people have to say, because it's my journey. I'm going to have a different, unique journey, a different, unique path. Man, I miss this. I miss being online. I miss doing this. I miss doing this. But yeah, just take time, like ICT says. Submit to time, and it's gonna be a process. You're not gonna become in and become an all-star, perfect trades within the first year. No, your first year, focus on surviving. So focus on surviving, and listen to what other people have to say. Just listen. Have open ears, because when I first started trading, I didn't have open ears. I kind of was like listening to what people were saying, but I wasn't really actually listening to what they were saying, if that makes sense. Like, oh yeah, don't worry about the money. Like, I kind of heard that a little bit, but then I was like, what? I wasn't really actually listening and applying it. Listen and apply knowledge. Yeah, I was sketch getting into him first. I'm currently at episode 12. Just watch that, and then just get familiar with it. 2022 mentorship. I actually haven't watched the 2022 mentorship. I'm not gonna lie. I think I might watch that after the 2023. But I've liked the 2023 mentorship a lot. But yeah, anyways, I'm gonna stop going on. I'll probably be live tomorrow. We'll see. Overall, today was a nice day. Today was a nice day. Everything makes sense. Go back in your charts, and everything makes sense in my opinion. We end up respecting levels perfectly, and then it come back into levels that just make sense. They just make logical sense. And how we're looking into tomorrow, I'm expecting this to be a stop braid. This looked like we took sell side, and I think we're gonna displace higher. Good advice, dog. Just wanted to know what you think I could do to understand when liquidity. Uh, Sorry, no. I'll answer your questions because you're here and you're here. You're here. Okay. What do you think I could do to understand when? What do you mean, like when liquidity? Oh, okay. I'll if you watch ICT in the 2023 mentorship, one trade setup for life. I'm pretty much gonna explain that within like 4 minutes. So I'm gonna simplify it. Pretty much, get this indicator, ICT kill zones and pivots, and you want to pay attention to the session liquidity. You want to pay attention to Asia high and low, London high and low, AM and P. These all hold significance. These session liquidity pools with sessions around them are going to hold a lot more significance. And yeah, that's simplified. Just study it. Yeah, we end up taking previous PM session low, and then that ends up starting this. We take London Asia high, boom, displacement. We end up taking PM session low into this for value gap. What do we have? We end up having buy side. We end up taking London low. What ends up happening? We end up getting a move. What do we come into here? We take London low here. What ends up happening? Buy model. Like this. London Asia low taken. Boom. Sell model. So these liquidity pools that are around sessions, that are framed around time, are going to be important. And obviously the more prominent highs and lows are going to be more important. But look at liquidity centered around time. Why is this pool important here? This is a previous day low. We end up taking it and end up heading higher. That's why it's important. Why is this liquidity important here? AM session low. Previous day low. We take it. Boom. So these time intervals are going to hold significance. Here, why is this important? This is London low, it looks like. Why is this important? It's Asia low, I think. Yeah, that's what I would say. But yeah, I'm gonna head out for real. I want to be live tomorrow. We'll see if it works out and if I feel like doing it, because I don't nah. I'm just here. I'm here to grow as a trader, and I found a lot of improvement within the past like month of me just, I don't know, just going after every day. Like I know why people like to sit in front of live streams, and I'm here to grow. I'm here to learn, but it also is good to tape read. So I'll probably be live tomorrow, and yeah, I'll see you then. I appreciate you guys, and